You didn't click on this video to hear about another minor price pump or a speculative rumor. You're here because of something fundamental is shifting beneath the surface of the global financial system, and almost no one is looking at the right indicators. Now, while the retail market obsesses over daily candles, the actual architecture of the global banking is being rewritten. We are witnessing the birth of the invisible plumbing, a series of deep-level technical and institutional upgrades that are turning the XRP ledger from a simple payments rail into the primary treasury tool for the world's largest financial institutions. Now, the headlines are starting to leak, but the hidden truth is found in the specific partnerships forming right now between entities like Evernorth and Doppler Finance. Now, this isn't just about moving money. It is about where the world's capital is going to live. The global financial system moves roughly $5 trillion every single day through the legacy SWIFT network, often taking 3 to 5 days for finality. Now, in contrast, the XRP ledger is currently engineered to settle those same trillions in 3 seconds with a fraction of the overhead cost. This massive gap in efficiency is exactly why the biggest players are finally moving past the pilot phase. For years, the critique of XRP was that it was just a bridge. Critics argued that banks would buy it, use it for a split second, and sell it immediately, creating no long-term value. But that narrative just died. A new collaboration between Evernorth, a powerhouse backed by both Ripple and SBI Holdings, and Doppler Finance has fundamentally changed the game. Now, they aren't just building a bridge, they are building a vault. Now, by creating a professional-grade liquidity and treasury framework, they are giving institutions a reason to actually hold XRP on their balance sheets. When a company like Evernorth, which already sits on $1 billion XRP treasury, starts building the tools for others to do the same, the supply-demand metrics are going to change forever. We are advancing practical frameworks for deploying institutional XRP liquidity on-chain, with the goal of setting a higher standard for how XRP is used, managed, and scaled across the global markets. This is the beginning of institutional DeFi. That quote from Evernorth's leadership isn't just corporate speak. It is a declaration of intent. They are preparing the ground for what they would call institutional-grade yield. Imagine a world where a bank doesn't just use the XRP ledger to send money to a branch in Tokyo, but actually keeps its reserves on ledger to earn a regulated low-risk return. Now, this is the shift from a traditional asset to a fundamental capital. Traditional corporate treasuries currently hold over $3 trillion in idle cash that loses value to inflation. The upcoming XRP Ledger lending protocol aims to capture just 1% of that idle capital, which would represent a $30 billion influx of liquidity. We are looking at a total professionalization of the ledger. Now, these aren't just software updates. They are the structural reinforcements needed to hold the weight of the world's economy. Now, looking at the speed of these developments, I cannot help but feel that the window for cheap entry based on utility is closing faster than the market realizes. The plumbing is almost finished, and once the water starts flowing, the entire landscape will look unrecognizable. To understand the scale of what is happening, we have to look at the people moving the chess pieces. Now, this isn't a group of anonymous developers or retail influencers. This is the elite of the financial world stepping out of the shadows. At the center of this storm is Ashish Birla, a former Ripple executive who now leads Evernorth. Now, Evernorth isn't just another startup. It is a purpose-built digital asset treasury that has already amassed a staggering $1 billion in XRP. Now, this massive war chest isn't sitting idle. It is being positioned as the cornerstone of the new institutional liquidity network. Evernorth currently holds 1 billion XRP, a treasury valuation that exceeds the market capitalization of many mid-tier global banks. This hoard represents roughly 1% of the total circulating supply. positioned specifically to provide deep liquidity for institutional settlement. But Birla isn't stopping at just holding the asset. He recently made it clear that this billion-dollar figure is merely the baseline for a much larger strategy. The goal is to turn Evernorth into a powerhouse on the Nasdaq, operating under the ticker XRPN. By partnering with Doppler Finance, they are creating the first professional-grade bridge between the XRP ledger and the traditional equity market. Now, they are solving the number one problem that has kept big banks on the sidelines for a decade: the lack of a regulated, high-security framework for capital deployment. The next phase of the XRP ledger adoption will be driven by institutions that demand clarity, structure, and real economic utility. By collaborating with Doppler, we are advancing practical frameworks for deploying institutional XRP liquidity on-chain, with the goal of setting a higher standard for how XRP is used, managed, and scaled. This partnership is designed to handle the heavy lifting that legacy systems can no longer manage. Doppler Finance provides the technical engine, while Evernorth provides the capital. Together, they are building a system where a multi-billion-dollar bank can move into the XRP ecosystem without the friction of technical uncertainty. This is the professionalization of the ledger in real time. We are moving away from the era of testing and into the era of integration, where the ledger becomes the primary balance sheet for the next generation of finance. The proposed Nasdaq listing under the ticker XRPN would actually provide a regulated entry point for traditional investors to gain exposure to the XRP ledger's utility. This model allows institutional capital to flow into the ecosystem through a familiar, publicly traded vehicle. With the backing of SBI Holdings, a Japanese financial titan that has already committed $200 million to this initiative, the momentum is becoming undeniable. When I see this level of coordination between former Ripple executives, Japanese mega banks, and specialized infrastructure providers, I cannot help but feel that the institutional rails are being laid in broad daylight. Most of the market is distracted by short-term volatility, but the hidden truth is found here, in the contracts and the capital. Now, this handshake isn't just a business deal, it is the construction of a new global standard. For nearly a decade, the narrative surrounding XRP has been defined by a single word: bridge. Now, the idea was simple. XRP would act as the universal translator for value, allowing a bank in New York to send dollars and have them arrive as yen in Tokyo in under 3 seconds. Now, in this model, XRP was a transit point, something that you would hold for a heartbeat before swapping it back into fiat. While efficient, this created a massive velocity problem. If institutions are only holding the asset for 3 seconds, well, they don't need a high price, they just need deep liquidity. But as we move into 2026, that entire thesis is being upgraded. We are moving from the era of transactional XRP to the era of foundational XRP. In the bridge model, XRP has high velocity and low total value locked, TVL, as it is sold immediately after the settlement. Now, in the treasury model, institutions lock XRP into vaults to earn yield, drastically reducing circulating supply and shifting the focus from transactional speed to long-term asset accumulation. The shift is driven by a realization within the executive suites of firms like Evernorth and Doppler Finance. They've realized that the real value of the XRP ledger isn't just in the speed of the pipe, but in the quality of the water. Now, banks are no longer looking at XRP as just a way to avoid pre-funding nostro accounts. They are looking at it as a way to replace those accounts with a productive, yield-bearing asset. So instead of just holding trillions of dollars in idle cash, non-interest-bearing fiat, if you will, across the globe, well, they can now hold a single, liquid asset that earns a return natively on the ledger. Working with Evernorth represents a meaningful step forward in expanding institutional participation across the XRP ledger. By aligning institutional liquidity with robust infrastructure and disciplined risk frameworks, we aim to unlock XRP's full potential as a scalable, yield-generating asset for global markets. That statement from Doppler Finance's leadership marks the end of the bridge-only era. So when you combine this with the upcoming native lending protocol, the incentive structure for a bank changes completely. Why would you sell your XRP after a transaction if you could instead park it in a single asset vault and earn a percentage return for providing liquidity to other institutions? This is the XRP-Fi, the decentralization of the corporate treasury. It turns every XRP token into a tiny piece of the global financial infrastructure that pays you to own it. Traditional bank treasuries currently face a liquidity trap, where capital is stuck in low-yield or zero-yield accounts for compliance. By transitioning to the XRP Ledger-based treasury management, institutions can access 24/7 liquidity while earning a projected 4 to 7% yield through automated lending and AMM participation. Looking at this shift, I cannot help but feel that the market is still pricing XRP as if it is a 2017 payments coin. Now, it hasn't yet accounted for the hold factor. When banks transition from being users to holders, the supply shock will be unlike anything that we have seen in the crypto space. We are witnessing the transformation of a currency into a commodity, a digital gold that doesn't just sit in a vault, but actively works to settle the world's debts while growing the balance sheet of its owner. The hidden truth is that the bridge was just the beginning. The treasury is the end game. If you want to understand why global banks are finally moving from interested to invested, then you have to look at the architectural shift known as XLS-66. For years, the decentralized finance space, or DeFi for short, has been a wild west of pooled liquidity, where every participant shares the risk of everyone else. If a major borrower were to default on a traditional DeFi platform, well, the entire pool will feel the sting. This commingled risk is a non-starter for a Tier 1 bank. They need precision, they need predictability, and most importantly, they need isolation. This is exactly what the new XRP Ledger lending protocol provides through its unique single-asset vault architecture. Traditional DeFi lending relies on omnibus pools where all assets are mixed, creating systemic risk. The XRP Ledger Single Asset Vault XLS-65 actually isolates each loan facility into its own dedicated container, ensuring that a default in one vault has zero impact on the capital held in another. This isn't just a technical tweak, it is a total reimagining of on-chain credit. By using these isolated vaults, the XRP Ledger allows institutions to engage in fixed-term, fixed-rate lending. In the legacy world, banks live and breathe by these fixed terms. They cannot build a multi-billion-dollar business on the variable, fluctuating interest rates based and found on other blockchains. With XLS-66, a corporate treasury can lend out XRP or new USD stablecoins with a guaranteed return and a clear maturity date, mirroring the exact structure of the multi-trillion-dollar bond and commercial paper markets. The XRP Ledger's lending protocol is a protocol-native framework built around fixed-term, fixed-rate, and underwritten credit. It enables productive on-ledger lending tailored for institutions, while creating a structured pathway for XRP holders to earn yield backed by real economic activity. That design philosophy, as outlined by Ripple's engineering team, is the liquidity pump that the ledger has been waiting for. It solves the idle capital problem. Right now, there are billions of dollars worth of XRP just sitting in cold storage, doing nothing but waiting for price appreciation. XLS-66, it turns that dormant supply into active capital. Market makers can borrow XRP for inventory management, and fintech providers can borrow stablecoins to fund instant cross-border payouts. Every time a loan is issued, it creates a utility-driven demand for the token that has nothing to do with retail speculation and everything to do with the functional need of global finance. The XRP Ledger loan lifecycle begins with off-chain underwriting to ensure KYC/AML compliance. The terms are then recorded on Ledger in a loan object, which automates repayments and interest distributions with second-by-second precision, removing the need for manual back-office reconciliation. Looking at this, I can't help but feel that we are moving towards a black hole effect for liquidity. As these institutional-grade yield opportunities go live, capital will naturally flow towards the most efficient and secure environment. If a bank can earn a safer, more transparent 5% yield on the XRP ledger than they can in an opaque legacy repo market, well, the choice becomes a mathematical certainty. The hidden truth is that the lending protocol isn't just a feature for traders. It is the foundation for a decentralized global treasury that could essentially dwarf the entire current DeFi landscape combined. If Chapter 4 was the engine of the new financial system, then Chapter 5 is about the hull of the ship. You see, in late 2025, the XRP Ledger underwent its most significant technical overhaul to date, the jump to version 3.0.0. Now, for most casual observers, a version jump sounds like a routine maintenance, but in the world of institutional finance, this was a massive signal of maturity. The developers didn't focus on flashy retail features. They focused on the fortification, a series of deep code fixes designed to ensure that when a bank moves $1 billion, every single decimal point is accounted for with absolute mathematical certainty. XRP Ledger version 3.0.0, it introduces the fixed token escrow version 1. It's an amendment to eliminate the accounting discrepancies in multi-purpose tokens. It also added the STINT32, data type. Now, this allows the ledger to handle native integers, a mandatory requirement for professional risk-adjusted calculations and institutional lending scripts. This focus on accounting precision is what separates a crypto project from a financial utility. For example, the new version fixed a subtle rounding error in automated market maker clawbacks and corrected inconsistencies in price oracle data ordering. Now, to a day trader, these are just invisible details, but to a compliance officer at a global bank, these are the prerequisites for entry. Now, they need to know that the ledger won't just work most of the time, but all of the time, especially during periods of extreme network load. Version 3.0.0 is a strategic shift in the XRP ledger trajectory. We are removing the technical roadblocks that previously prevented regulated financial products from living natively on-chain. This update strengthens the core areas required for tokenized assets, stablecoin issuance, and institutional DeFi applications. These structural reinforcements arrived just in time, as transaction volume on the ledger surged by over 400% during the recent stress tests. The 3.0.0 architecture proved its resilience by fixing a critical vulnerability where batch transactions could previously trigger a consensus stall. By hardening the way that the ledger handles thousands of simultaneous internal requests, the developers have effectively prepared the pipes for the massive influx of traffic that will come as Evernorth and Doppler Finance go live with their treasury tools. The version 3.0.0 upgrade enhances the Simulate API, allowing institutions to run dry run tests on complex transactions before they are committed to the live ledger. Now, this allows for 100% predictable outcomes, reducing the risk of failed transactions or costly back-office reconciliation errors. Now, while the infrastructure is designed for maximum security, we have to maintain a level head about the transition. Right? As with any generational leap in technology, there are inherent risks in the software itself and the volatility of the underlying asset. Now, I am not a financial advisor, and nothing in this video should be taken as financial advice. You must do your own research and understand that the crypto markets remain a high-risk environment. However, looking at the sheer engineering discipline behind this update, it is clear that Ripple and the XRP Ledger Foundation are no longer building for the early adopter. They are now building for the final adopter, the global banking system itself. Banks don't think in quarterly earning cycles. They think in decades. If a financial institution is going to commit trillions of dollars to a blockchain, well, they need to know that the encryption securing those assets won't be cracked by the computers of the next generation. Now, this brings us to the most forward-thinking part of the recent technical roadmap, the mitigation of the quantum threat. Now, while most people view quantum computing as a science fiction problem for the distant future, for a global bank, the danger is actually present today through what is known as a retrospective decryption. The harvest now, decrypt later strategy involves bad actors capturing encrypted blockchain traffic today with the intent to decrypt it in years from now once quantum computers are capable. Now, this makes current high-value settlement data vulnerable even before a functional quantum computer is even built. To neutralize this, the XRP Ledger is pioneering the implementation of the Dilithium algorithm, a NIST standardized lattice-based cryptographic signature scheme. Now, Dilithium is specifically designed to be quantum safe, meaning that it is mathematical problems are so complex that they believe to be unsolvable even by the most powerful quantum machines. By adding support for Dilithium signatures, the ledger isn't just getting an upgrade, it is getting a permanent defensive wall. Now, this ensures that a transaction signed today remains secure and private for 50 years or more. By integrating Crystal's Dilithium alongside existing classical algorithms, a smooth transition to quantum resistance is enabled while also ensuring backward compatibility. Now, this approach sets a standard for quantum-resistant blockchain security and provides the long-term integrity required for enterprise applications. The challenge with these signatures is their physical weight. A standard digital signature today is roughly 70 bytes, but a Dilithium signature can be over 2,400 bytes. Now, this required the engineers behind versions 3.0.0 to fundamentally optimize how the ledger handles data and how validator nodes communicate across the network. But for an institution handling national-level reserves, this increased data size is a small price to pay for what they would call cryptographic longevity. Current ECDSA signatures are highly efficient for small retail transactions, but vulnerable to Shor's algorithm on a quantum scale. Dilithium signatures are significantly larger, but utilize lattice math to remain secure against quantum factoring, providing the audit-grade proof required for institutional vaults. Looking at this development, I can't help but feel that the XRP Ledger is effectively out-engineering its competition. While many blockchains are still struggling with basic scaling or frequent network outages, the XRP Ledger is already building for a world where quantum computers are a reality. Now, they are providing the quantum shield that turns the ledger into a permanent unhackable vault for the world's wealth. The hidden truth is that the world's 30,000 banks. This kind of future-proofing isn't a luxury, it is an absolute prerequisite for adoption. Now, we've established the security and the yield, but now we have to face the elephant that is in the room, the math. The XRP Ledger is often cited as having a throughput of 1,500 transactions per second. While that is lightning fast compared to Bitcoin's 7 or Ethereum's 15, it still looks tiny when you hold it up against giants of legacy finance. Now, to handle every bank on Earth, the system doesn't just need to be safe, it needs to be infinite. Now, if the XRP Ledger is truly the invisible plumbing of the $320 trillion market, then we have to ask if the pipes are actually wide enough to handle the pressure. While the XRP Ledger handles roughly 1,500 transactions per second, the global retail network Visa averages 8,500 transactions per second, with peaks over 65,000. For wholesale banking, however, the requirements are different. The entire SWIFT network only processes about 500 messages per second, meaning that the XRP Ledger has already tripled the capacity needed for the global interbank settlement. This distinction between retail and wholesale is the hidden truth of the scaling debate. Most people are comparing XRP to Visa, but XRP isn't trying to be a credit card for your monthly and morning coffee, right? At least not on the main net. It is actually trying to be the settlement layer for the banks that fund the coffee companies. Now, for wholesale settlement, where a single transaction might represent $50 million, 1,500 transactions per second is more than enough. However, to truly capture the entire financial stack, the architecture does have to evolve beyond a single chain. Now we are entering the era of horizontal scaling. We are not just building a single blockchain, we are building a network of networks. By utilizing federated sidechains and EVM-compatible layer, the XRP Ledger can offload high-frequency retail traffic to specialized chains while maintaining the mainnet as the ultimate high-security clearinghouse for global value. This network of networks strategy is the answer to the scaling question. In 2026, the launch of the XRP-L EVM sidechain and the progress of hooks for smart contracts have allowed the ecosystem to branch out. Imagine a world where every major bank runs its own private sidechain for internal bookkeeping, only settling the net balance on the XRP Ledger mainnet once every minute. Now this effectively gives the ledger infinite throughput. Right? The mainnet stays lean and fast because it is not clogged with billions of microtransactions, while the sidechains can handle the heavy lifting of modern commerce. The XRP Ledger horizontal architecture allows the mainnet as a Tier 0 settlement layer. Sidechains act as Tier 1 throughput layers, capable of handling hundreds of thousands of transactions collectively, before bundling them into a single cryptographic proof that is finalized on the mainnet in 3 seconds. Looking at this tiered approach, I can't help but feel that the critics who focus solely on the 1500 TPS limit are missing the forest for the trees. You see, they are looking at the capacity of a single pipe, rather than the capacity of the entire grid. Now, by creating a system where sidechains can plug into the main net's liquidity, the developers have ensured that the XRP Ledger can grow alongside the global economy without ever needing a hard fork or a total re-architecture. Now, the system isn't just ready for every bank, it is built to outlive them. While Western markets have been tangled in regulatory debates, Japan has been quietly building the world's first XRP-first economy. This is not a theory. It is a coordinated national strategy led by SBI Holdings, a financial titan that manages billions in assets and has spent the last decade positioning the XRP Ledger as the core of Japan's digital future. Now, the architect of this vision, Yoshitaka Kaitao, recently confirmed that this decade-long bet has reached its maturity phase. We are now seeing the full-scale integration of the ledger into the daily operations of Japan's banking sector, proving that the infrastructure that we've discussed isn't just functional, it is profitable. Over 60 Japanese banks, representing nearly 8% of the country's total banking assets, have already joined the SBI Ripple Asia Consortium. Now, this network allows for instant 24/7 domestic and international settlement, effectively replacing the aging legacy systems that previously dictated the flow of Japanese capital. The speed of this rollout is accelerating as we enter 2026. The most critical piece of the puzzle is the Q1 launch of RLUSD, Ripple's regulated stablecoin, which SBI VC Trade will distribute exclusively in Japan. Now, by pairing XRP's speed with a compliant yen-backed and dollar-backed stablecoin environment, SBI is creating a redundancy strategy for global finance. It's the same philosophy that I recommend when choosing where to hold your assets. Never rely on a single point of failure. And if you want to master these institutional strategies for yourself, then I've put a 50% off discount code for the cheeky score in the description down below, along with links to the exchanges that I use to manage my own risk. Needless to say, it is these fields, Ripple and the broader cryptocurrency ecosystem, that currently play a part in the pillar of the SBI Group's earnings. Our strategy to position blockchain as the technology that will bring about the greatest social change over the next 10 years is now fully validated. That 2026 New Year address from Kai Tao wasn't just a victory lap, it was a roadmap. SBI isn't just using the ledger for payments anymore. They are moving into the treasury phase that we covered earlier. Their recent $200 million cash investment into Evernorth's XRP treasury confirms that they are no longer just service providers. They are major asset holders. They understand that as the XRP ledger becomes the standard for interbank settlement across Asia, the demand for the underlying asset will move from millions to billions of dollars in daily utility-driven volume. SBI Holdings' investment in Evernorth is part of a broader plan to raise over $1 billion for a public XRP treasury. Now, this capital is being used to purchase XRP on the open market, creating persistent buy-side pressure that is decoupled from retail sentiment and driven strictly by the institutional treasury needs. Looking at the Japanese model, I can't help but feel that this is the blueprint for the rest of the world will eventually be following. Now, they have solved the legal status, they've built the user interface through applications like MoneyTap, and now they are installing the heavy liquidity through Evernorth and Doppler. The hidden truth is that Japan has already crossed the finish line, while other nations are still debating if this technology is viable. An entire G7 nation is already running its profit margins through the XRP ledger. The experiment is over. The era of utility has arrived. I've spent years tracking the movements of this ledger, and I've seen countless narratives come and go. But looking at the convergence of Evernorth, Doppler Finance, and the technical fortification of version 3.0.0, I cannot help but feel that we are at the most significant disconnect in the history of this asset. On one side, we have the retail market, still scared by years of legal battles and price stagnation, viewing XRP through the lens of speculative lottery tickets. Right? And on the other side, we have the world's most powerful financial institutions, building the invisible plumbing that will soon carry the weight of the global commerce. Now, the market is currently pricing XRP based on sentiment, but the hidden truth is that the ledger is being prepared for a reality where price is driven strictly by the requirements of the balance sheets. Historical data shows that over 90% of XRP's current daily volume is speculative, coming from retail exchanges. However, institutional demand from liquidity hubs like Evernorth is projected to introduce non-speculative buy pressure, where billions in XRP is purchased to fulfill treasury reserves regardless of the current market price. When you look at these numbers, the conclusion is hard to ignore. The asset is being fundamentally mispriced because the utility floor hasn't been established yet. Most people ask, what is the price of XRP? When they should be asking, what is the cost of liquidity for a $30 trillion bank? You see, if a bank needs to move $5 billion instantly, well, they cannot do it with an asset that has a low market cap and thin liquidity. To handle the scale of global banking, the price of XRP must be high enough to facilitate massive transfers without causing double-digit slippage. Now, this isn't a moon theory. It is a mathematical necessity of the financial system that they are building. The infrastructure being deployed today by Evernorth and Doppler is the missing link that converts network activity into asset value. We are moving towards a world where the XRP ledger is the primary clearinghouse for the global value, and in that world, liquidity is the most precious commodity on Earth. This is why I believe that we are approaching a supply shock that the average investor just isn't prepared for. When institutions transition from being users who buy and sell in seconds to holders who lock XRP into single asset vaults for yield, the available supply on exchanges will just evaporate. Now, this is the moment where the transactional XRP that we've known for years becomes foundational capital. Now, looking at the speed of the Japanese rollout and the technical readiness of the version 3.0.0 update, it is clear to me that the era of utility-driven demand isn't some distant dream. It is the reality of 2026. The utility floor concept, it suggests that once the XRP ledger handles just 5% of global cross-border payments, the required liquidity pool would necessitate a token price significantly higher than current levels to prevent extreme volatility during billion-dollar settlements. My personal take is that we are witnessing the birth of a new asset class entirely. XRP is becoming the digital version of a Tier 1 reserve asset, similar to gold or high-grade government bonds, but with the added benefit of being a high-speed technological rail. While the rest of the world waits for a headline to tell them that it is okay to pay attention, but smart money is already building the vaults. Now, I've seen enough to know that once the invisible plumbing is turned on, the flow of capital will be so fast that the current price levels will look like a relic of a primitive era. As we pull back the curtain on the hidden truth, a clear picture emerges. The XRP ledger isn't just a competitor to other blockchains. It is a direct challenge to legacy financial architecture that has governed the world for over 50 years. We have moved past the era of speculation and into the era of final endgame. From the technical fortification of version 3.0.0 to the institutional vaults being built by Evernorth and Doppler Finance, the invisible plumbing is now fully operational. The question is no longer whether the technology works, but how quickly the world's 30,000 banks will actually realize that the legacy system is the anchor that they can no longer afford to drag. The total addressable market for global payment systems and banking settlements is estimated to be over $300 trillion. Now, if the XRP ledger captures even a fraction of the wholesale settlement market currently dominated by the 50-year-old SWIFT network, the daily utility volume will dwarf all current retail trading combined. This shift, it represents a total transfer of power. For decades, the flow of value was slow, expensive, and opaque. By moving that value onto the XRP ledger, we are witnessing the decentralization of institutional liquidity. But to thrive in this new landscape, you need a community that understands these shifts before they become mainstream news. And that is why we have opened up our Discord community for free. It is a place where we track these institutional movements and technical updates in real time. You can find the link in the description down below to join thousands of other people who are researching all of this in real time, looking at the data and not just the charts. We are not just participating in a transition. We are witnessing the total replacement of the legacy financial stack. The XRP ledger has been hardened over a decade for this exact moment, to provide the speed, security, and scalability required to serve the world's digital liquidity layer. Looking at the Japanese blueprint and the upcoming launch of the native lending protocol, it is clear that the hold narrative is finally replaced the sell narrative. When the world's largest banks begin to treat XRP as a fundamental treasury asset, the scarcity of the token becomes the most defining feature. We are standing at the edge of a new financial era where the hidden truth is finally being revealed. The XRP Ledger was never just about payments. It was built to be the operating system of the entire global economy. The roadmap for 2026 includes the full activation of institutional lending, vaults, and the widespread adoption of RLUSD across Asia and Europe. This combination creates a closed-loop ecosystem where value never has to leave the ledger to be spent, lent, or settled, finalizing the XRP Ledger's position as the world's most efficient financial utility. As the water begins to flow through these new pipes, the disconnect between price and utility will eventually vanish. The infrastructure is finished, the partnerships are signed, and the capital is moving. We are no longer waiting for the future. We are living in the first chapters of it. The plumbing is invisible, but the impact will be seen by everyone. This is the endgame for the legacy system and the beginning of a truly digital global economy. But now you can do me a favor by hitting the like button, subscribing to the channel, and checking the video that is queued up on the screen. I will catch you all in the next one.